All right, we're going to toss it over to Anthony Smith and Zach Strickland. We've got our first carrier update for us this morning.
Good morning and welcome to this first carrier update of the day, brought to you by Powerfleet. I'm here with Zach Strickland. Zach, what are we jumping into first?
Yeah, this first day of March, as Mike and Kaylee were talking about. So we're watching for any kind of spring volumes to show up this time of year. March typically brings with it a little bit of a change in the trend of the freight market in general. Of course, COVID times and all that have changed the seasonality of things over the last bit. So let's look and see what we've got going on. So the last few days, we've seen our outbound tender volume index start to increase, a little pickup in the volume. Now, it's not necessarily a huge trend breaker or setter even at this point, but it is interesting to see these increasing volumes start to pick up as we approach the time of year where volumes tend to increase. So definitely one worth watching here. But outbound tender rejection index, so the rejected portion of this tender volume, actually still kind of slowly crawling back lower. I mean, we're still in the 18% range, but we're dropping about 10 to 20 basis points a day at this point, slowly kind of contracting. Now, the rate increases, of course, having a big thing to do with that, but this demand side pressure has me a little uneasy about where this number is going to go and how quickly it's going to go there over the next month or so, because like I said, end of quarter, even in the COVID era, we've seen increasing volumes at the end of these, transitionary periods, end of month, end of quarter, but specifically end of quarter, as a lot of that revenue has to be accounted for. So you get a lot more shipping activity at that point. They want to close out a lot of deals at the end of the month. You have sales quotas and things like that that really push a lot of volume. So this first quarter, a big one for a lot of companies out there. So these two values right here, I feel like are going to make some sort of change here over the next 30 days or so. And I don't know that it will go all the way back up, but I think that we will see a little bit more of a stair step here for these volumes. Now, tender rejections, that's kind of the big question, is how resilient is capacity? It looks like it may be growing at a very nominal rate. It's not growing quickly, but it looks like it is growing. And that's just, I don't think rate increases are really having as much to do with it as they once did, but we'll see soon enough.
Yeah, Zach, it's interesting to see this moderating trend for those volumes despite this downward movement for rejection. So we were talking about it just yesterday. It's all in a certain context, like what's going on in the environment when you start to see these two movements, because as you mentioned, those rates are definitely coming up.
Yeah, I mean, the rates are coming up. And speaking of rates, let's go to the next chart and look at the spot rates, which are actually kind of coming down. But you have to take this a little bit carefully, because yes, the rates are coming down, but if you see this purple line right here, that's the Department of Energy average price of diesel. Now, the whole Ukrainian situation over there really causing, it is kind of amplifying the increase in crude oil and diesel prices across the globe, and that's going to have a pretty big impact on these spot rates. So we've got the reefer rate up here, the truckstop.com top 100 reefer rates, $4.23. That is the third sequential decline that we've seen. Similar pattern in the van side of things, down around $3.57 all in. I say all in because it includes fuel, and that is very important. So if you look all the way back to last year on some of these values, you can apply about a 20 cent per mile increase because of this fuel number. So this number would potentially be lower, probably a decent bit lower, had this fuel number not increased to where it is right now. That actually puts the van rate about on par with where we were this time last year.
That is impressive.
Yeah, so it's definitely something that people are going to need to pay attention to, especially if you're obviously paying for the transportation costs. But that's going to keep this number a little bit higher than you would anticipate, especially this time of year. Your flatbed spot rates continue to increase, and these two numbers tend to have a pretty decent relationship. The more fuel, obviously we're a huge fuel producer. The flatbed sector really has a big tie to that sector. So these two values tend to kind of go hand in hand, especially with the faster this number starts to increase. more fuel is needed.
Amazing, Zach. Well, thank you so much for jumping into these details. We'll get back to you again, I think, throughout this morning, but right now we're going to toss back over to Michael Vincent and Kaylee Nick.